Welcome back. Well, the markets are more or less unmoved. Headline index is a little bit in the red. The mid caps are trading in the green. So actually unmoved from the start of the show. But let's get talking about a couple of portfolios. And we have Amit Jeswani, the founder and CIO at Stallion Assets, who joins us on the show. Hi, Amit. Good afternoon, and thanks so much for joining in. Well, Amit, the last time you joined us, you were telling us about a couple of stocks that you all have added to the portfolio. And if I remember correctly, MCX was one stock that has done very well for you all. So tell us, what's the fresh call on some of these exchange-related stocks, these platforms? Point number one. Point number two is tech, new age tech, I think was 15% of your total portfolio. And you had a view on Paytm. In this dip, are you all adding, or are you all, Paytm is not a stock you'll hold?
Good afternoon, Nigel. Thank you so much for having me on your show. Yes, we are still riding the capital market wave. In fact, we've added one demerger in the wealth management space. So as of now, capital market remains about 15% of our portfolio. On the new tech side, see, when you get full tosses, you go for it, and the probabilities are on our side. So we go in aggressively. On the fintech company that you spoke about, we've completely exited the day the news came. So we still have about 13% on the fintech, on the new age companies, but we've exited the fintech lender that you were speaking about. See, you don't make money from payments, you make money from lending. And if that is not happening, we were playing a framework which was loss to profit. And once the framework has problems, we move ahead. We are emotionless. So what happens typically, Nigel, in a bull market, you always have out of 10, 15, 25 stocks that we own, 2-3 stocks which are in problems, which would be like 5-7% weight of your portfolio. In a bull market, you also always have other opportunities. So if we see that something is not going right, our thesis are wrong, we are emotional less sellers. We wanted to sell at 9:16. We probably got an exit by 12 o'clock.
All right. So that explains your thesis there. You still have about 13% in new age businesses itself. What are the ones that you like there? Is it beauty? Is it food? Is it, some platform? What is it that you prefer there?
So Mangalam, we've got Zomato, which is food, and we've got PB Fintech. Both are growing way faster than the market. Until the time there is no problem on the thesis, till the time the growth is there, we're going to hold these companies. And the day we feel that we have a better alternate, we move out. So we are emotional-less investors, I would say. But looks like Zomato should do 2,000 crores of PAT next year. That is what our thesis is. That Zomato's PAT next year will be 2,000 crores. Policy Bazaar should be PAT positive this quarter onwards, like Q3 onwards. They've already guided this on the con call. So that is the thesis. It's a framework that we use. We bet on frameworks and we make decisions based on these frameworks. And for now, we are holding both Paytm and Policy Bazaar and Zomato, and we've sold our Paytm positions completely.
Have you looked at names like Mamaearth and Delivery?
No, we don't have any exposure there. Mamaearth, the supply should be a lot next year. So we like how they are buying small brands. Like they bought Dr. Shade for 5 crores. Today, revenues are in 3 years, 150 crores. They bought one more brand, Aqua. My apologies, I'm not good with beauty, so I don't remember the name. But there, the ARR is 350 crores in no time. So they're hyperscalers. They're scaling up well, but we don't have any positions. And valuations are also not super cheap. So, but you're getting such good full tosses that everything is relative in our business. We look at alpha opportunities, and Mama doesn't fit the basket yet, but we're tracking their execution aggressively. Delivery, the growth rates don't fit our criteria. See, the reason why you buy these tech companies or you pay very high valuations is because of 40%, 50% growth. And if you don't find that kind of growth rate, then you would be better off being with traditional players. And delivery growth rates have been very poor at 9-10%. So we're not interested in delivery for now. Unless it starts growing at 30-40%, we will start looking at it.
Got that. Amit, hi, good afternoon. You said emotionless twice, and I was wondering, can we replace that word with cold-blooded sellers? You think that's that doesn't go well?
Amit, actually, it's a season to be jolly, and everyone's talking about positive vibes, and suddenly Amit comes on the channel, and the last 5 minutes is talking about being emotionalness. All of us were like, oh, what's going on?
See, what happens, Nigel, is that you focus too much on the 5%. Of your losers, you'll focus 95% of your times, and you focus very less on your winners. In a bull market, be very impatient with your losers. Like, at least we have learned the lesson a hard way. I tell my investors that if I make a mistake, I will not tell you that I've made a mistake. I'll tell you that I've corrected my mistake, got out of it, and moved on in life. It's okay to make mistakes. We are in the business of making decisions. Buying is a decision, selling is a decision, doing nothing is also a decision. And when you make such decisions, you'll make mistakes and you move ahead, no problem.
Absolutely. And you know, what you're saying is during very strong bull markets, the tendency to make mistakes also goes up, right? Because valuations are very high. There is one part of it. And of course, it looks like the next guy is making so much money, the urge to do something is very strong. And that's where emotion also comes in. Do you see that at play in a lot of pockets, Amit?
Absolutely. In fact, we are also FOMO'd so many times. This market FOMOs you because there is always someone who's performing better than you. You do start thinking that should I go more B2G? Like, we have zero exposure towards B2G. Just imagine our position. So life is tough, but we're up 60% this year, so it's okay. Nothing bad, nothing to complain. But the FOMO is there. The moves which are happening in markets are very, very aggressive. And now there were two known unknowns. See, there are two kinds of risks which typically happen. One is unknown. Something like COVID was an unknown. And there were two known unknowns. One was election and one was the Fed. I believe the markets have moved ahead. And I was just speaking to someone and I was telling them that, by March, the markets will price in whatever 5 years of Modi gain is expected. So markets are hyper discounting mode, hyper discounting. There is everyone has the same information thanks to people like you and social media. And the discounting, the returns that we think we'll make in 3-4 years are getting made in like 9 months, 12 months. So it's unbelievable, the market. But you have to keep churning. You have to keep finding newer ideas because markets, if example, there used to be a time, I'll give you an example, Prashant, that there used to be a time that page industry would grow at 30% every year and you would get like 40% returns, some returns from earnings and some PE would go higher every year. But now what market does, if market has conviction that this company will grow at 30% for next 5 years, markets will price the 5 years growth in first year itself. So if you don't sell out and find one more 30% grower, then you'll be stuck with that stock because then there is no upside left in that stock.
So then let's cut to the chase.
Just one thing, Amit. When you said that you are very super quick to sell, right? If something doesn't work out, do you mean is there a function of the price not behaving as you wanted to? Because one is a little more jumpy if one is buying now fresh, something new. At maybe fairly high valuations, and if it goes against you, then you don't want to hang around to find out. Is that or are you talking more fundamental thesis? Something has changed, that kind of thing.
So Prashant, in Paytm's case, Paytm was doing about 16.5 crores of lending a quarter, and analysts were pricing in that this will move higher because they were growing at 100% year over year. So it was expected the next 2-3 years they will move towards 1.5-2 lakh crores of lending. And on 2 lakh crores of lending, you make 4% is your take rate. That means you make 8,000 crores. You've gone from 16,000 crores a quarter of lending, and now you're looking at 8,000 crores a quarter. So there's a degrowth. Which will happen in less than 50,000 crore, less than 50,000 rupee loans. And you don't want to, because like I'll give you an example. We were getting Nuama at 20p that time, 18p, 20p, FY24, whereas Anand Rathi was at 54p, 361 was at 35p, and this one was growing at 30%. It was a demerger. We already have the 12th man in the team, always. So if any players of my team get injured, we quickly remove him from the team and find another player which we think can do better.
What's the current 12th man looking like? Let's cut to the chase. You said it's very difficult to find ideas in a market like this where everything is being discounted, etc. You have to work hard. So we'll allow you to do the work for our viewers. What is it that you're looking at right now?
So we've got a block in a very small company. I don't think I should name all these players. My team doesn't get very happy with me naming them. Of course, we're a SEBI registered. We have
yes.
entity now. This is recommendations. These are just what we are doing in our portfolio. So do not even try following us. We exit with great speed, as you already know. So we've got this structural steel tube pipes company called JTL Industries. We're buying today also, but we bought it large quantities on the block. So that company is doing ROCs of 35%. We've sold our APL Apollos to get into this. So APL Apollo did a 10x for us, and we've sold our APL Apollo and converted some of them to JTL Industries. We did it at a block at 196, and we purchased some today as well. We expect decent numbers for the company for next 3-4 quarters.
Interesting. Moving out of APL, Apollo, and moving into JTL, it has valuation support, but let's see what they do. And they have a fundraising plan as well later today. So let's see what comes out of that. Well, Amit, thanks so much for joining in. Good speaking to you and filling us in with, you know, the way you're moving your portfolio. And, you know, when Amit spoke about the 12th man, you know, Mangalam, what came to my mind? Virat running in. Remember with the drinks.
With the drinks.
With the drinks. So anyway, thanks.
It's not very often. It has to be a bear market for your 12th man to be Virat Kohli.
But
in this case,
that video
is hilarious.
It's still playing in my mind. But let's keep that for later. For the time.